Well, we're about to launch into a deep dive, comprehensive view of your financial statements. After all your hard work up to this point, now we have some great financial statements to look at. But before we do that, I want this stuff to come alive to you. I want you to understand the story and look at it holistically from day one. Okay, so I've actually built a great tool that makes all of your key elements from your financial statements into a one-page visual. We're going to look at that so far with what's on the books from here, but we'll go through it kind of layer by layer and understand what's happening so that you can make the best decisions that you can. Okay, you're going to see trouble spots perhaps, identify how to change those trouble spots, and then pull those levers and turn those gears to help your future so that you can achieve your dreams and goals sooner than you thought, and so that you can keep on providing great products and services to your customers. Okay, there's our why. That's our driving force. All right, let's start with the reports that I'm talking about. First of all, in QuickBooks, we can get there by going to reports, and we've already gone through and starred some of these to put them in our favorites. We're going to be talking about the profit and loss or income statement, the statement of cash flows, and the balance sheet. We're going to see how these things flow together. It's pretty awesome, but let's understand it so we can see what's going on. Here is the visual representation. So I'll just scroll down. You can kind of see the full page visual. All right, going through that same list, okay? Income statement, statement of cash flows, balance sheet. All right, now let's put this together to build understanding. So income statement takes you from revenue to profit, okay? All the way down here. The visual shows you a funnel. Where's the squeeze on profit? All right, moving on down, we have the statement of cash flows. Notice that the profit, the net income, flows right here to the beginning of the statement of cash flows. And then it tells the story of cash. Where did it come from? Where did it go? Notice the big changes. We have a decrease down, and then it comes back up. And then we have our little summary over here. Okay, and then it ends with cash, right? So what does the balance sheet start with? You guessed it, cash. So let's see how that goes. Cash flows right into this top portion here. But how does that contribute to all of our assets? Here's assets. How does that compare to overall liabilities right here? Hopefully we have more assets than liabilities, right? That gives us a nice positive equity number. Now, little teaser. Just like personal finance has assets and liabilities and the difference is net worth, well, the same exact thing can be said for equity. Equity is the difference between those. So equity is just a lot like personal finance's net worth. That really helped me to make the connection there. I want my net worth of my business to go up, okay? I want to have it positive, but I want it to increase. How do I do that? I can increase assets or decrease liabilities. That's the only ways to increase equity. Also, by the way, profit flows right into the equity line too. So little fun fact there. All right, now that we have that basic idea, let's go back to the top. Okay, so we have this one-page visual. We can plug in our numbers from these key parts from our financials. It produces this. Okay, then what? We're going to look at these, and one, if it's perfectly good, if we're fully satisfied, great. Let's pack it up and go home. Give yourself a pat on the back. But if it's not, if you're not satisfied with something that's happening on this report, by the way it looks, or something that you know, like my bank account is really suffering, we can use this to examine. Now, we would use this report to see where the trouble spots are, and then shoot back over to our financials, to that portion, and see, more closely what activity is contributing to that balance that we are not satisfied with. Then we come up with a treatment plan. Okay, we got to see it to act on it. Okay, visibility and clarity are the first step. By the way, all of this is only useful if the numbers you're using are reliable. Luckily, you going through this course addresses that. Okay, you're learning a ton about how to do this properly and will maintain it throughout the lifetime of your business. So great job. Congratulations to you on that. Now, let's make it come alive. All right, now that we have that overview done, let's go through it one more time, adding a new layer to it to really understand what we're seeing here and where we would go on our reports to change it. Okay, so our income statement, again, is our total revenue through gross profit, operating profit, and then finally at net income. So, of course, total revenue is all of your different income streams going into the top line of your income statement. Then we have gross profit. Okay, gross profit is that top line revenue minus your cost of goods sold or direct costs, everything that you have to buy in order to do the job that's earning you money. Okay, and it comes down to what account type is it. Okay, going back to that chart of accounts video that we spent so much time on, got to make sure these accounts are in the right spot to have this visibility. All right, below that is operating profit. So from gross profit To operating profit, that's all of your overhead expenses, like your rent or your advertising, for instance. And if that's where the squeeze is, you need to look at that spending compared to what your gross profit level is, okay, in dollars, to adjust accordingly. Don't let your overhead expenses get out of control when your gross profit's going down, okay? You got to watch that. And then from operating profit down to net income, there's the other section. So you actually have other income and other expenses. And whatever the net is there contributes to the change from operating profit to net income, to bottom line profit. Again, the idea is that we identify where the spot is, shoot back over to our statements and look at that portion to figure out what we need to change, what levers to pull and gears to turn to make our different levels of profit like we want to see them. All right, so end with profit here. Okay, but that's not the end of the story, right? That flows into the statement of cash flows. So now on our statement of cash flows, again, we have the visual and we have the report with the itemized breakdown, the more specific stuff. So first of all, we have net income. So that's positive, that's good. But then we have operations, which is actually negative. Now, where it's okay to have these negative, a lot of times, in fact, finance will probably be negative a lot, especially if that's how you're taking your paycheck, let's say, as a distribution, that will probably always be negative. That's okay. We really want the operations to be positive, okay? That's really important. So whatever your statement of cash flows is saying in the operations section, whatever's the biggest negative there, look at that and see what needs to happen. Okay, so we want this to be positive. I don't like how it's negative. We're startup phase, we're getting stuff figured out, but I want to address this quickly. Anytime you buy a fixed asset, you're going to have the value of cash decreased. Maybe you pay for it in cash outright. Obviously, that's a decrease in cash. If there's a loan involved, we have a relationship kind of like this. But the idea for those assets, it says investing, right? You want to get a return on those assets. Those assets should bring a return to you in the form of driving revenue, back up to the top line, right? And hopefully you can hold on to that revenue in the form of profit because your profit funnel is nice and open. Okay, and financing. How is the business financed? So yes, a lot of times loans are part of this. We think of the word financing when it comes to like a car loan or something, which is debt, right? That's a liability on your balance sheet. Okay, but also very important to know here, owner-related activity or shareholder-related activity is found here too. Okay, that's equity from the balance sheet. Now, you as a small business owner are most likely the primary shareholder of your company. I want you to treat yourself like a shareholder. So just like I go invest in the stock market, okay, that's the equities market. I'm investing there so that by the time I retire, I have a big old fat Roth IRA to retire on. That's my return on the investment. You invested in your company. You should get a return for your investment, for all your hard work, for the risk you took, the benefit of providing great services and products to your customers, okay? All that is part of equity. All right, so that's what we see here. In the financing, we see loans, long-term loans, and equity activity as well. Then we have our summary right here. So $0 to start. As a startup, that totally makes sense. But then we have our change in cash right here. Now, this is the net of all of this activity happening here to contribute to how our cash increased in this case, or maybe decreased. So we got to see this and understand what's happening so that we don't run out of cash, okay? Cash is the lifeblood of your company. If a business owner only looked at their P&L, they're missing out on so much valuable information. First of all, they can see they're profitable. Awesome, hooray. But if their cash is leaving, they're not going to survive. They're going to go under quick. So we got to have clarity and visibility on this. And then we got to know how to act on it. Okay, so we're building up layers on this thing. So the statement of cash flows ends with cash. Awesome. So where does that go? Well, cash goes to the top portion of the balance sheet. And how does that contribute to the rest of your assets? Okay, so notice we have more assets than liabilities. Okay, that's good. We have positive equity. Awesome. But the shaded areas. Notice we have current assets and current liabilities. Think of 12 months when you hear the word current. So on the assets side, we think, okay, all of this stuff I can expect to convert to cash within 12 months. And as we just said, cash is very important. We got to make sure we're converting that stuff to cash. Current liabilities is the stuff that I am expected to pay or have to pay within 12 months. So that relationship is also very important. You want your current assets to be more than current liabilities, just like overall assets to liabilities. And if that gets out of whack, we got to understand what's happening. So by the way, we noticed that drop in cash from operations, that is the current assets and current liabilities, okay? Changes in that we have resulted in a negative cash. Probably it's accounts receivable. I bet this whole thing is accounts receivable. We need to collect money on that. If we did that, our cash would be much more positive than it is, because this would have gone up, probably into positive, if we collected that accounts receivable, which is found on the balance sheet. So again, you cannot survive by just looking at your P&L. You need to look at all of this to understand what's going on. And all of that, of course, leads to equity, right? What's the difference between your overall assets and liabilities? We have equity. Now, equity is a great first place to look on your balance sheet. Okay, you can see, one, is it positive? Good. Is it increasing over time? Outstanding. That is what you want. Is it decreasing over time? Uh-oh, that's a big red flag and you need to address it. By using this visual and understanding what your reports are doing, you can identify that as well as what's contributing to the loss. And with that understanding, you will be much further ahead than any other business owner out there. From day one, you can understand what these are telling you and make decisions based on that. So you can see what your profit funnel is like, right? To open that up if you can or need to. You can see what's happening in your cash and see, okay, I got to stop doing this. I need to collect on my accounts receivable. I can't afford to invest in this right now. I got to hold on to my cash for a rainy day. You can identify those things and come up with a solution for yourself. You can look at your balance sheet to see the overall health of your assets, liabilities, and equity. Okay, what you own versus what you owe, and then what's left over. Make your equity increase over time, to trend upward over time. And then it all resets, right? What do you need to do to increase your revenue, keep your profit funnel open, and so on and so forth. So you, a business owner, now having this plus all your learning and know-how up through this course, can identify where the trouble spots are and catch them early so that you can make decisions now to help out your future. You're going to put yourself on a path to success much more than other business owners out there and avoid the pitfalls so that you can reach your goals and dreams as fast as you possibly can. Also, by the way, helping out your customers by providing awesome goods and services to them. All right, thank you so much for watching. Thank you for taking part in this course. I wish you the very best success that you possibly can. Have a wonderful day.